You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined with Kansas State University grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby. I appreciate it.
And Dan, kicking off our grain market conversation with what are futures looking like?
Well, on an important day in the markets against it's the November crop report. It's not the last crop report for this year, but it's an important one. Uh, we do have one more time of survey data presentation by the USDA that'll be in January in that big combined mass of reports that happen. But this sort of sets the stage in terms of what the market thinks it has supply demand wise domestically in the U.S. anyway for the next couple months. So we've just laid down foundation for a lot of for November through December into early January where the grain market's going to go. And the futures, as you mentioned, they responded in kind. They the D's 2023 corn closed down 8 cents to 468, which surprisingly, to me anyway, a couple days ago, earlier this week, it traded at 468, had an up day, and then with this negative news, it basically traded back to where it was earlier in the week. So that you can take that different ways. To me, it's that hey, well, there's bigger corn production than we thought. And so we didn't see the bottom necessarily drop out of the market, but it just went back to kind of this quote comfortable level of 468. And there is carry in the market about from Dece to March 24, about just under 5 cents a bushel, about 4 and 3/8 from March to May to July, about 4.5. So the market right now with large supplies, again, came out with a projection of 15.2 billion bushels. I think basically the highest on record. Still, market is telling producers to store. You know, it's a carrying charge market. And you look at the other major mover or the major concern out of this report in the soybean market, and came in with a little bit higher, not as proportionally as large an increase in production for beans, but saw the market close at 1327. Well, the November contract, now it's in delivery at 1327.75. The one that we're really following more closely now, the January contract, 1343.5. And again, not just a falling out of bed response to what could have been viewed pretty bearishly in the market, a drop of 22 cents basically. But again, you've got even in soybeans, which is surprising because you do have South American crops that we normally think, well, they're going to come. So why they're coming here in the next few months? Why get all excited? But we have carrying charges of 7 cents a month from January to March, March to May. Excuse me, as 6 cents a month, and then the carry falls off in July. So again, the market with a larger crop coming is giving short-term signals to just hold it. You know, hold your grain. We'll come for it later on. So either on farm, in elevators, whichever, but that it's basically covering storage costs right now. And I would say wheat also closed down, but there we've seen some underlying support, I think, for wheat. If anything, you look at the wheat chart, which had been going down at a 45-degree angle for a good while, now seems to be, for a little bit anyway, heading sideways. So took this day in stride, went down just about the same amount, little less than corn, and established again a closure for December at 647.25. Interesting, next July is sitting there at had closed at 672. So you've got gains into next spring, and so interesting to watch. If you'd like, I could talk about cash prices.
Go for it, Dan.
Sounds good. Thank you. So you see fair amount of basis movement in different places. Cash corn prices, uh, 25 cents over futures in Garden City. That for the highest bid, Hutchinson 15 over, 10 over in Colby, even money in Salina, 10 under, 5 and 10 under in Columbus and Topeka. So not a lot of a change there. It is interesting to see the new crop bids. You do have a pretty strong new crop bid in Southwest Kansas, where the feedlots and some ethanol plants are. 514, 5 over. Everything else running about 20 to 30 under. Grain sorghum, it's interesting. We generally most of the market is looking at everything else, but for us in Kansas, grain sorghum is a pretty good deal, and the USDA dropped the production estimate for grain sorghum from 360 million bushels down to 322, tightened up the supply demand balance sheet a little bit. Basic. Now, I would argue with the USDA on one thing they did. They whereas for the corn market price, they dropped it from 495 to 485. Well, they did the same thing for grain sorghum. But when you look at these cash markets, where we're at, we've got stronger than that cash market. So I guess I'd have a bone of contention with my friends in USDA that I'm not so sure that grain sorghum price is going down as much as they're talking about. Anyway, but when you look at grain sorghum prices, again, that 503 in Topeka versus corn at 458, 513 in Salina versus 468 in cash, 528 high 528 and 541 in Hutchinson and Columbus versus 483, 463. So sorghum prices, along with their strong bought ahead export numbers, are probably better, at least from my perspective, than maybe the USDA is appreciating in this report. So interesting to look at those things, and I guess we'll see. I think you and I talked before we came on air. Here a pretty bearish report. Really, how come the bottom didn't just fall out? Well, I think that the market sort of digested this report and said, "Hey, I see what you're saying. Fair enough, but we're concerned about weather in Brazil and Argentina right now. The impact of the switch from La Nina to El Nino. We have dry or too wet conditions affecting planting, a lot of replanting of soybeans, some what'll end up and be delayed planting for the second corn crop because of these delays for soybeans there in Brazil. So you have other issues that are as at least as much in the mind and the eyesight, the focus of the grain markets in this USDA report, and because of that, here we have some bearish numbers, and we just had a moderate bearish response in my view.
And we'll talk about that USDA World Agricultural Supply and Demand Estimates report here in just a moment. But before we hop to it, quickly discussing the crop condition report and winter wheat seeding.
Yeah, winter wheat seedings. We're here we are mid-November. Most then the USDA ratings for the percentage planted for the Kansas crop is, as you'd expect, about 96%. There's probably some on the edges that may still be planted in different parts. And emergence rated at, if we're 96% planted, emergence at 81%, and that's a little bit above average, so that's okay. But our conditioned ratings in terms of the amount, very poor, fair, good, and excellent, pretty startling for the Kansas crop. We've in these numbers that have come out here earlier this week, and we've had no rain since then. You have 16% of the Kansas wheat crop, and it's this very early condition at very poor, 18% at poor, only 35% at fair, and then for good to excellent, you've got 28 and 3, so about 31%. And there's some other states that also aren't doing very well that are around us. Oklahoma 4% very poor, 12% poor. Texas 8% very poor, 11% poor. But again, we're in an unenviable position of having the worst rating out of these three states, heading from Kansas to Oklahoma to Texas in terms of its wheat crop. And I'm sure as Chip Redmond talks about weather forecasts that on our KSU system, that people are anxiously awaiting any word of a chance when rain will come. And really, it's important now to get that wheat emerge, get a stand, etc., to be in decent shape before winter freezes come and all of that. So pretty critical time for the wheat crop, even though it's so early in the cropping cycle.
And now kind of looking a little bit at that WASDE report that just came out this Thursday. And first, looking at the supply and demand of cotton.
Yeah, the cotton numbers came out and showed the production figures actually were a little bit higher, but what stands out to cotton growers is the some deterioration in market price prospects, at least for the national average price. We took about 3 cents a pound off of that from the USDA's projection down to 77 cents. We were at about 84.8 cents last year. So in some of these same areas where we're growing cotton, it's also awfully dry, and of course cotton's a very drought tolerant crop. It holds up well, but if yields are just so, then one way to overcome poor yields and production would be good prices. But it seems that we've just got a moderate situation to slightly declining now for cotton, as opposed to a stronger market, which most of our good ag producers would like to have happen.
And Dan, what are you seeing with the other supply and demand balance sheets for our other grains that impact Kansas?
Well, the big issue is on corn. The USDA came in, they were at 173.9 bushels per acre last in the October report. They came in at 174.9, so we raised it to still not 177. So there are effects of the drought here in the U.S. But by the time you run then a 15.23 billion bushel crop through the supply demand balance sheet, you end up with ending stocks that are still well over 2 billion at 2.156, and really 2 billion and somewhere around 8, 9, 10% stocks to use is really kind of a break even. So we have the view that we have a pretty good corn crop, pretty good supplies. We're not worried about any major shortfall unless demand would really pick up. And by the way, demand would pick up if they have major crop problems down South America. But as we stand right now, again, we have the evidence to put us at just about 460, 470 for corn futures. And for soybeans, again, a little bit of an increase in the supply demand balance sheet for U.S. soybeans, but in the ending stocks figure increased from 220 to 245, 246 million bushels ending stocks. Still pretty tight situation. And again, we're looking at strong exports. Problems in South America right now are sending buyers to our shores, and we had 82 million bushels of exports, actual shipments the week ending November the 2nd, and we need about 31 to meet the USDA's projection. But of course, we've got about a 4 to 6 month window before the next South American crop comes. But as it is right now, I think one thing again that you and I talked about before we came on there, one positive aspect, a silver lining of this, is that, hey, we've got a moderation in prices, somewhat low. World buyers in the last week have come in and seen this as an opportunity. So they've kind of viewed this November report as that they're kind of acting like they think it's the low because they're buying. So I think that's something to watch and gives us hope for a base in these markets being built for the corn and soybean markets, and some strength that would be coming in. And these are the type of factors that anybody storing these grains instead of selling them are trying to deduce and figure out in terms of what the potential is for things to move higher.
So Dan, as we kind of enter into the end of the year, how are things lining up for 2024?
Pardon me. I think as we sit today, it looks like we're we're not looking for the best soybean crop. Some disappointment in Brazil in particular for their soybean crop. And right now you do see the soybean to corn new crop price ratios for 2025 futures strongly favoring soybeans. It does set us up. I'm thinking, Shelby, for strong price competition for acres in the spring. So it's one thing to have at this time, sitting here in November, to have strong signals to plant soybeans next year, but will the corn market tolerate that? We have a lot of corn industry that wants to have supplies too. So that to me, it with what we're seeing in soybeans isn't isolated to soybeans. It's going to affect corn eventually when we start to make acreage decisions out there in 2025. And of course, if it's dry right now, if we have any problems through the winter, that will lend us some price strength for wheat heading off once we break dormancy off into March, early April. So that's another factor to watch.
Dan, I appreciate you taking the time to join us today and once again give us a grain market update.
Thank you, Shelby. I appreciate the opportunity.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we have more ahead for you.